Guys, I have an absolute awesome investment out there for you, which I want to discuss in this video. Even if you're a beginner, if you're advanced and you have overlooked this investment, it is a great one to have part of your portfolio. It actually makes up 50% of my portfolio currently. And there's a lot of factors that make this an absolute great investment. One factor is diversification. You're investing with this one fund, you're investing into a lot of companies, over 500. You're investing into different sectors, different industries, so you have that diversification in your portfolio. You're not investing in just one company. So for example, if that company you invest in went bust during a downturn, they were doing extremely unwell, or if management were making bad decisions, you might have to sell at a loss. One company will not define you in this portfolio, as all your other companies that you've invested in this fund can really bring you back and make you gains. Another thing, this fund has very low fees, and fees are a killer when it comes to investments, and the fees in this particular fund are extremely low, which is also very attractive. Another indicator which is great when we're looking at this particular fund is past performance. This fund has absolutely done outstanding compared to other funds, compared to companies individually, if we look at past performance, and I'm going to go through that with you in this video. Now, let's get straight into looking at exactly what this investment is. Guys, so I'm on Vanguard.com. For a lot of you who do not know Vanguard, this is essentially an investment website that has over 30 million customers worldwide. It is a massive investment company. Now I'm looking, and what I have half of my portfolio invested in is the Vanguard S&P 500 ETF, ticker symbol VOO, VOO. Now you can see this is essentially an investment in the stocks in the S&P 500 index, which represents just over 500 of the largest US companies. The goal of this fund is to closely track the index's return, which is considered a gauge of the overall US stock returns. Now this would be more on the riskier side because it's shares, it's share based, it's based on stocks of companies. So if you're looking for less risk, you could consider looking into investment into bonds. I myself are in my 20s, so I take that as I want more risk, more returns, and as I go into my 50s, 60s, I would reduce my risk and look for even lower rewards at that stage as I'm getting closer to retirement. So let's look at the hypothetical growth of $10,000. So if you had $10,000 and you invested it between 2010 and 2011, it would be worth now $32,480. Now obviously this would have been more. As you can see, it was $35,805, but due to unfortunate the coronavirus, this has hampered global economies and global investments, unfortunately. So we're seeing that dip, but that should be only a temporary dip, hopefully, as we move forward. And as you can see, the coronavirus numbers are at least reducing somewhat around the world at the minute. So we can expect that hopefully that investment will go up in future years to come. You may invest into stocks, and you may pick a company that you really like, and you can get emotionally involved. And when you're emotionally involved, if that company loses money, you might be, oh my god, I need to get out now before it goes down more, and you sell at a loss. And then if it ends up going up, you could buy in at the wrong time, and then it could go down again. You're making loss. A lot of investors are emotionally invested in the companies they choose. Good thing about this is there's over 500 companies. You don't have to analyze an annual report. You don't have to analyze earnings for a specific company. If Elon Musk at Telsa comes out and says something crazy and your stocks shoot down in Telsa, you don't have to worry about that because diversification. You're over 500 companies. Look at the sectors. We're in communication services, we're in customer staples, we're in energy, financials, healthcare, information technology, materials, real estate, utilities. We're covered in a lot of different sectors, and we're covered by the top companies as well. You can see here that as of March end, the 10 largest holdings in this ETF fund was Microsoft Corporation, Apple, Amazon, you're looking at Facebook, you're looking at Johnson & Johnson, you're looking at Visa, JP Morgan and Chase. So diversification is a massive key there, and we're covered with these top large companies in America also. Now, I just want to take your attention here to financialcalculators.com, and what we're going to look at here is we're going to look at historic 40-year investment into the S&P 500 index. Now, as you can see here, the reason I chose 40 years is because 40 years is the average that an individual would invest into a retirement fund. So we'd say from age 20 to age 60, that'd be an example of 40 years. So we're going to look at if we invested $10,000 into the S&P 500 index in 1979 and we closed the position in 2019, which is 40 years. So this is going to be an example of us taking past performance as a result as a future indicator. Now, past performance, it's not everything, obviously. It's just past performance, but it is a good indicator in some cases for what we can look at and what we can hope to get a return on in the future. Now, you do need to consult with a financial advisor before you undertake any investment advice at all, or undertake any investments. I wouldn't say this is investment advice. This is what I've done in my portfolio. So you need to make sure that you're aware of what this index is and what essentially you're investing in. So you see here we've $10,000 invested, 40 years, and we scroll down here and our ending value is basically $299,313. So basically $300,000 is our end value. So I want to thank you for taking the time to look at today's video, and leave a comment in the comments below, because is there anything else that you would like me to cover regarding investments? If you have another investment you're thinking of, or you were considering investing in, or if you have any more questions on Vanguard or any of the other ETFs or mutual funds that they actually offer. Take care, guys. Talk to you soon.